We've never seen bigger profits. The concentration in each industry has increased, and the FAANGs that are remarkable companies are in their own way instant monopolies. So the monopolistic feature of our economy today, and somewhat around the world, has increased. This is very good for profits. It's not so good for growth. And the governments are beginning to twitch a bit.
So the big question, Jeremy, is what should investors be doing against this backdrop of super bubbles? What assets should they be owning?
If you have to own US stocks, you should own high quality stocks that are in good financial shape, because this can always spiral into something of a financial crisis. They often do. I would emphasize, in general though, non-US stocks. And quite a few countries, as I said, are not that bad. Emerging markets has some overhang problems. If the US goes and commodities are high priced, it's a mixed blessing at best for them, but they're very, very cheap. And in the end, cheapness usually trumps everything else. So emerging markets, some of the cheaper developed countries would be very much better idea than a massive holding of US equities.
And what about Aussie equities? Have you seen any good buying opportunities here?
I'm not an expert on Australian equities. It doesn't look cheap, but it doesn't look horrific.
We're entering this period of rising rates and inflation. We're seeing labour shortages and potentially reduced growth. Is this the Goldilocks period over?
I think it is ending. I'm trying to write a paper which is basically the end of the golden era, or Goldilocks and three hungry bears. Everything has been different for the 20 years of the 21st century. The PEs average not just a little bit higher, but 50, 60% higher. Profit margins average 30, 35% higher than they had in the previous 50, 60 years. Everything seemed to work out. Corporations got a lot of political power. The taxes on capital all dropped. Tax on dividends, tax on interest rates, tax on capital gains all came down. Most of the regulatory bodies were somewhat captured by corporations, and they have had a golden era. We've never seen bigger profits. The concentration in each industry has increased, and the FAANGs that are remarkable companies are in their own way instant monopolies. So the monopolistic feature of our economy today, and somewhat around the world, has increased. This is very good for profits. It's not so good for growth. And the governments are beginning to twitch a bit.
What's your view on digital assets, Jeremy? Should everyone hold some?
No, I don't think they're assets. I think they embed a technology that may turn out rather like the internet to be useful here, there, and everywhere. And when they are useful and when they're making money in the traditional way, then you value it like any other money-making enterprise. But while they just sit there and they go up in price because people are persuaded that they will go up in price, it's very much a question of the emperor and his clothes, I think. Bitcoin in particular, it does nothing for anybody and is superseded by a whole generation of smarter and more effective cryptocurrencies, many of which in their turn do not make money in the traditional way, and a few do. So I'm sure the idea embedded in cryptocurrency will be around for perhaps forever. But I'm equally certain that most of the value today as a store of value is a hoax. It is not a store of value. Everyone can agree that the volatility is massive. It goes up and down with the high-risk stocks. What is the point of a store of value that trades like a hyperspec? I mean, this is not the principle. Gold in comparison with several thousand years of practice, has been boringly stable throughout the last couple of years. I should know, I own some.
So finally, Jeremy, if we have begun this US equities crash, what hope can you give investors for the period ahead?
Stay out of trouble. Make sure you don't buy expensive markets, expensive stocks. Emphasize value, cheapness for what you get. Hunt around for the cheaper countries, hunt around for the cheaper stocks within those countries. Carry some cash reserves. There'll be perhaps some very nice buying opportunities. And whatever you do, get rid of this fear of missing out, this terrible lust to participate in profit making that comes along at the end of every one of the great bubbles. It is incredibly seductive, very hard to resist. Been there, done that myself a few decades ago, made a fortune and wiped myself out. Very salutary. And I would wish on most of you that you avoid it.
Jeremy Grantham, thank you.
Yeah, it's a pleasure. Thank you. Bye-bye.